So in another video, I was looking at this stock earlier today at about 12 p.m. I think it was. And I was making note of the fact that the price had dropped significantly and that it was in a downward direction overall. And we can see that by 4 p.m. it actually was down 5.6%. Okay, the percent change was minus 5.6 at 4 p.m. And if you don't know what that means, what it means is that the price at that time was 5.6% lower than it was yesterday when it closed. Now today's Monday, so it's not really yesterday, it's Friday. The stock market is closed on the weekends. So the last trading day, okay, if I look at the 1 week chart and I look at Friday the 21st, let's see if we can find that. Friday the 21st at 4 p.m. it was $1.25 per share. Today at 4 p.m. it was $1.18 per share. That is 6% lower. And I was analyzing it with this Google Sheet I created. And I was actually hoping for the price to increase significantly, perhaps from the low to the close. And it did not actually do that. And for some reason, this is on Friday and it should be on Monday. But we do see that, and this was based on the idea that typically the low and the close of the stock has a pretty large gap. So the close is usually a lot higher than the low, as we can see in this history. Right? This is the distance between the low on Monday and the close on Monday. And we can see that it's normal for it to be a largely positive difference if you look at these actual numbers. 3%, 3%, 3%, 10%, okay, 6%. There are a lot of fairly large numbers in here, 8%, 10% between the low price and the close price. Now, we didn't see that today, though, however. Okay, I did not see that today. We didn't see that today. Instead, it kept going down. But what we do see here in the after hours is a spike of 1.69% in the after hours. And perhaps what we might see is that it will continue to spike, continue to go higher, and tomorrow we could see a high that is much higher than the closing price was today. And this was what I was originally analyzing in a previous video, was Monday's close compared to Tuesday's high price. What that typically looks like. And I have found that on average it is 11%. Okay, the gap between Monday's close and Tuesday's high is 11% on average. And it is a positive gap, meaning the price goes up from Monday's close to Tuesday's high, or has gone up 83% of the time. And this is, by the way, for the past 250 days, which is basically the whole history of this stock, because this particular stock is fairly young. And so 83% of the time of Monday to Tuesdays has gone up in price. Okay. And the average gains 13.56%, and the average of losses only -1. So statistically, it looks good between Monday and Tuesday. And so that is basically why I typically like to deal with the stock on Mondays. All right. So I didn't see the price go up by close, but I am now seeing it go up in after hours. And now I'm curious to see where it will go from here. So if anything, I'll come back later, or perhaps later, or even tomorrow, to see where it goes from here. And if you don't have a copy of this Google Sheet, which helps you to do this sort of analysis, go ahead and get a copy of this Google Sheet. And I have other videos where I actually have explained this sheet a bit more. So this video was really just a continuation from me from this morning when I was looking at this earlier this morning. And so go ahead and get a copy. And if you want, you can contact me or leave comments, questions, or suggestions below. This is Mr. Mark, Spreadsheets for Stocks. Look forward to hearing from you or seeing you around on the channel.